Hello, everyone. This is Brittany Button, long-term care insurance specialist for Art Jetter and Company. Today, we have both Rob and Derek of Lincoln Financial Group joining us. Now, we're going to show you some tools that Lincoln Financial offers to help you with the long-term care planning conversation with your clients. We also have some time to review recent updates on their MoneyGuard portfolio. At the end of this session, we want to answer any and all questions you may have regarding long-term care insurance, even if it may be a little off topic. So please type those questions in the chat box of this presentation. So Rob, let's get started.
Awesome. Brittany, appreciate the invitation. I apologize in advance. I have a little under the weather, so I might hit mute so I don't cough in all your ears, but we appreciate you carving out some time. I'm going to talk the first half of this about the asset identifier, and then my internal partner, Derek, is going to touch on our product updates and really what makes us unique in this space. So let's just dive right into it. The reason you joined today is the topic of the asset identifier. So many of you in the past, if you've been doing this long-term care planning for a while, you've been working with clients, hopefully many of you brought up the topic of extended care planning or long-term care planning. And in the past, I started doing this 25 years ago, when folks decided not to move forward with long-term care. Often the sense was we wanted them to sign a hold harmless letter or long-term care waiver. And to me, that always seemed to a point where it's like, I'm just trying to protect myself. I'm not as worried about you. Please sign this, sign the illustration, so you release me, from all liability. At Lincoln, we want to look at it a different way. This is an important topic that we don't want to visit one and done. We'd like to have a process to not only have this discussion, but also identify the assets that, should they need long-term care, if they don't want to move forward with an insurance solution, and then also using this form as an easy way to approach the topic again. So we created this asset identifier. Let me flip right on over to it. My friend Brittany has put it in the chat. You're going to see a handout there, long-term Lincoln Financial Asset Identifier. This is the piece. You're welcome to take this as it is. You're welcome to take it and make it your own. I've had advisors or agents that I work with that have branded this themselves and taken really what the parts they like the best about this and move forward with it. So this is a one-page form. We're not going to make this complicated. And so if my friend Brittany and the team there at Jetter have run some long-term care illustrations for you and your clients, and they've decided maybe this isn't the right time to move forward with long-term care. They know they probably should, but maybe they need to wait 6 months, or they're going to revisit that in a year, maybe when they inherit some money. We want to make sure that they're aware that if something happened, we have a plan moving forward. So this asset identifier, we're going to start at the very top. As part of the ongoing financial process, and we're going to just put their name and their date. This is easy. So-and-so and I have reviewed and discussed the risks of a life-changing event, such as an extended need for care. The estimated current cost of long-term care in your area is the following. So we're going to identify what those costs are. What is it for in-home care? Last year at Lincoln, 55% of our claims were paid to home care agencies. Last year, assisted living, about 35% of claims. Private nursing home rooms, this surprises many folks. That was only about 8% of our claims. And our average claim, just so you have some sense, was right around age 83. So out there in the market, there's a variety of cost of care websites. Lincoln has one called whatcarecosts.com. So whatcarecosts.com. And in the upper right-hand corner, it just asks for a sponsor code. I'm going to tell you that's Lincoln. So just type in Lincoln. That's going to get you access to find out the cost of care in your area or anywhere in the country. Print off one pages is an awesome resource for you. But you're going to put down whether you use the Lincoln cost of care or another one. You're going to just cite that right here under source for above costs. Now, if Brittany's running an illustration for you and they've decided not to move forward, it's critical that they at least have a plan. So if they were to become frail and need care, or in an accident and end up needing care, how are we going to fund this need? So it says here, you've informed me that you'd like to self-insure against an extended healthcare need using the following assets. So this is what we're going to do. We're going to identify just three. We don't want to make this complicated. We don't want to overthink this. Three assets that we would use, that we would liquidate should we need care. So mom falls, gets moved into a nursing home for a period of time. How are we going to pay for that? So we're going to identify these. What's the account name, the type, the value, and the account number. So we're going to just identify three of these. Really easy to do. So if mom falls and the kids realize, hey, we got to get some care for mom, and they reach out to you, hey, you, Mr. Advisor or Mrs. Advisor, do we have a long-term care plan in place? You know, we discussed the need for a long-term care solution. They decided not to move forward at that time, but the good news is we have a plan. We've identified which assets we're going to use to pay for that. So we've already got a plan in place. That's easy to do. What I like most about this form, and we've had this form for about 4 years now, maybe almost going on 5 years now, is it says down the bottom, we will continue to review your plans to self-insure for long-term care expenses and how changes in your life may impact your future financial plans. They're going to just sign and date their name here. But what I've received feedback over the last 4 years from advisors that use this on semi-annual or annual reviews with their clients. And they bring it back out. Hey, last time we talked about long-term care planning. And at that point, you decided that you wanted to self-insure that risk, and that's okay. What I want to do is make sure that this form is updated. Are these still the account types, the specific accounts that you want to use to fund that need should that arise? And it might be, they might all be the same. And then we just put this back in the file and we're good to go. Now, it might also say, you know what, that first one there, we actually liquidated that to buy a lake home in Western Nebraska. We're super excited about it. Maybe we need to update this form. But more often than not, what I've heard from advisors that have been using this consistently within their practice is that this has been really kind of a non-threatening way to reapproach the topic, because more than once I've heard advisors say, you know, the client said, that's right, you talked to us about that nursing home insurance last year. And unfortunately, they still think of it as nursing home insurance, even though just a small fraction of claims are actually paid to a nursing home. You talked to us about that nursing home insurance, but Bob's mom just went in a care facility for memory care, and it's costing us $11,000 a month out of pocket. We can only go so long before we need to sell his house. Can we still get this? So this is a really easy way to bring the topic back up, whether it's semi-annual or annual reviews, and make sure that everyone is on the same page as far as if we don't have long-term care, we have a plan to fund that need. So this form, again, it's in the handouts. You're welcome to make it your own. It's just a one pager. The back here is just the order code and all of that. But go ahead, grab that form off the handouts, and you're welcome to use it. We're also going to show you a resource where you can find this form as well. I'm going to hand it over to my internal partner, Derek, now. Derek, why don't I flip to this screen here and let you move forward.
Fantastic. Well, thank you, Rob. Obviously, really great on the asset identifier. I love that piece so much too. There's a reason why we use it, and well, you outlined it very well. But as well, what I would like to do is I'd like to go through our most recent price improvement to MoneyGuard. This was effective January 22nd of 2024, and we implemented this improvement to our MoneyGuard Fixed Advantage and MoneyGuard 2 solutions. Now, these are our fixed solutions that span across 49 states. just not including New York. We don't have a Lincoln MoneyGuard solution in that state. And what we had done is we improved our fixed advantage solution between 0 and 22% with an average pricing discount of 15%, which is absolutely astonishing. That has propelled us to the #1 most highly rated hybrid LTC solution on the market between ages 50 and 60. There'll be more information on that in a second. But for MoneyGuard 2, we also made a price improvement to that one for all ages. This price improvement is approximately a 12% discount, which once again puts us into the #1 sell for most demographics in California. And so, Rob, if you'd like to, I'd love to move on to the next page, which shows essentially a introduction to the heat maps that Lincoln has created, comparing MoneyGuard against our competitors. So we've taken the best produced and best designed solutions of Securian, Nationwide, One America, Bright House, New York Life, and Northwestern Mutual to show just exactly where MoneyGuard stands up to the competition in different demographics. So Rob, on the next page, yeah, you'll see here that for a male 100,000 premium lump sum, assuming a 6-year benefit duration, MoneyGuard is going to stand and in the #1 position in most cells, which is really fantastic. So this goes to show that as long as we've been the highest, market share holder of hybrid LTC, the pricing now reflects that as well. Our average applicants are in the 50s to 60s ranges. So chances are for you folks with your clients looking for long-term care, those individuals who are preparing for retirement or who are near or already at retirement, MoneyGuard would be a fantastic fit. And as you can see here, payment structure, whether they are single, whether they're married, whether they are looking to pay in once or over 5 years or 10 years, you can see that if for a female 100,000 premium, same situation, just different gender, we still stack up incredibly amongst the competition. This has placed us in a really great spot for folks in their late 50s to early 60s. And once again, like I had said before, it goes to show that the pricing is now #1, accurate, reflecting just how well our resources and process has improved. And so why Lincoln? What makes Lincoln stand out amongst the competition? And what we found and whatever our advisors have found is that our 0-day elimination period is a complete game changer. The 0-day elimination period provides clients access to their benefits day 1, as soon as they qualify for a long-term care service. And so just looking at averages, just looking at numbers today, we can see that over 90 days, over a 3-month period, home health aid can be up to $20,000 over those 90 days. Assisted living facilities could cost upwards of $15,000, and nursing homes double that, close to $30,000, and that's just on average. For what we can see 30 years down the road, assuming a 3% inflation rate, we can see that those numbers double, if not triple, in certain cells, in certain states. And this goes to show that this expense can almost eviscerate a retirement portfolio should you not have the right protection in place. And if you were to opt for a long-term care solution, it's really important to note that elimination period. That 90-day elimination period is essentially a deductible period. It's a waiting period that is to say, all right, you purchased this long-term care solution, we're going to have you wait 90 days in order to receive those benefits. So you're essentially paying twice for care. You purchase this solution in order to cover yourself, but if you have to wait 3 months to access it, it seems a bit counterintuitive. So MoneyGuard's completely eliminated that stage of the process, and we're here to say, look, we already know that this is a significantly emotional, burdensome event. We want to make sure that financially you're prepared and you're taken care of. And so, Rob, moving on.
Jump in here. And the numbers on the right, Derek, fantastic job, really only reflect a 3% increase in the cost of care. Most folks, and really what we've seen over the last 5 years, is that the cost of care has been going up at more than 3%. So most folks would believe that these numbers on the right, between 35 and 70,000, could be significantly higher if it was 4 or 5% inflation in terms of what that deductible actually cost. Great job. I'm going to go to the next slide for you.
Thank you, Rob. And so looking at the next slide here, what Rob and I would like to do is really hone in on the features and amenities that you would be eligible to receive with a MoneyGuard solution. So aside from the long-term care benefits, what we have are flexible ways to receive your, well, your long-term care benefits. What you see here is FlexCare Cash, and this is informal cash compensation for your caregivers, for your family members, friends, neighbors, spouses, somebody who isn't licensed with a long-term care provider. And what you're going to see is here is that we've allocated up to half of the monthly benefit for this type of care. So that's not to say that that $9,000 is automatically gone. No, you're able to use formal care and informal care compensation concurrently. You just can't use it on the same day. So let's give an example here. Let's just say 5 days out of the week, your family's out of the house and you need somebody to take care of you. You can have a home health aide come visit you during those 5 days of the week, and you'll be able to tap into that full $9,000 monthly benefit. So whether you're incurring $500 per day or $1,000 per day, that option is totally available to you, however you want to allocate it. Come the weekend, when the family's all home, you might want to say, you know what, I want to spend more time with my family, and they love me so much, they want to spend time with me. I want to compensate them for them having to take care of me. What you can do is you can utilize FlexCare Cash to pay them each day. So the way to calculate how much they would be receiving each day is to take the monthly benefit, that $9,000, divide it by 2, because we're using half of that benefit, which would be 4,500 allocated for the month. And what we'll do is we'll take however many days are in that month and divide that 4,500 by that number. In this case, if we're using a 30-day month, you'll be eligible to receive $150 per day to pay for that care that your family members, neighbors, spouses are providing for you. So really, you stay in control with a policy that provides convenience and flexibility today and tomorrow. And moving on from FlexCare Cash, we also have a benefit transfer rider. And now I love this one. This is probably my favorite feature because it's not actually an additional rider. It's already baked into the policy's benefits. You don't have to elect for this on an application. And what's more, you don't have to make a decision on what this provides to you until come time for claim. So what is the benefit transfer rider? The benefit transfer rider essentially is a flexible way for you to receive your death benefit. So with most life policies, you have the option to take the death benefit in full. You know, we've seen it already, we've all seen it. But what you also have to do with this benefit transfer rider specifically is reinvest the death benefit that you receive into your own MoneyGuard policy. And to make matters even more flexible, you can actually do a combination of both of those options if you'd like. So how does that actually work? Well, let's just say you have a couple clients, they're married to each other and they're looking for long-term care. Well, they can take out MoneyGuard policies for each other and they can name each other the beneficiaries on those policies. So what's going to happen down the road 20, 30 years? Let's say unfortunately one of them passes away. Their surviving spouse, when they receive the death benefit, they have the option to take a portion of that for themselves, maybe pay for funeral expenses, pay for family to come in to attend the funeral. And they can take the remaining portion of that to reinvest it into their own MoneyGuard policy at no additional underwriting. So really where this shines, especially when we get into the latter years of life, maybe into their late 80s, early 90s, maybe they're in a memory care facility, or maybe they're in a nursing home, they can already be on claim and still have the opportunity to reinvest their partner's death benefit into their own policy. It is incredible because there is no other solution on the market where you're able to add more benefits to your policy in an uninsurable condition. This completely changed the game for MoneyGuard specifically because we don't have a joint solution. And a feature like this effectively makes the policy a second to die. And more than anything, as we are a family-centric firm, we do want to make sure that we are showing suit and we are following suit with our solutions like Benefit Transfer Rider.
Hey, one great points, Derek. One, I want to say, when you decide to file a claim for the death benefit, you can decide what percentage of that death benefit you want. When we move that back into your own policy, we're going to leverage those dollars. So let's say he died, he had a $100,000 death benefit. And she says, you know what? I don't need the death benefit today. I want more long-term care. So what we're going to do is we're going to leverage that by about 7% on the death benefit. So we're going to add 107,000 to her death benefit. We're also going to leverage that 100,000 by about 50% for the long-term care benefit. So we're going to add $150,000 with no evidence of insurability to their own long-term care policy. This is built in. We've also not limited this to spouses. So most of the time you're going to see joint life policies require a husband and wife. If my mom buys MoneyGuard, me as her son, even though I'm 28 years younger, if I have a MoneyGuard policy, I can have benefit transfer go to me. This is on all the available new MoneyGuard policies. So again, an opportunity to leverage this benefit across generations and to leverage those dollars with no underwriting. So let's move on and go ahead, Derek.
Thank you, Rob. So our concierge care coordination. This again is another feature and more of an amenity of MoneyGuard that effectively provides you a team, somebody to guide you through the claims process and guide you through designating a long-term care provider. We understand that, your client's care should revolve around them. All right. And we want to make sure that we're there to help build a plan for you, for your family members, to make this as easy as possible. My grandmother, when she was entering her long-term care event, she has dementia. We weren't really sure who to go to, what home health agency to work with, maybe if she needed to go into a home, what home to go into. And what we had found is that with most of those agencies, some of them might have a reputable name, but the folks who work there, we don't know them. We're not sure if they're going to provide the care that my grandmother needed. And it turned out that unfortunately they did not. So we had to rather onboard the experience of a concierge to help find a home. And that cost a lot of money. It cost a few $100s, if not $1,000, in order just to have these conversations with them. So what MoneyGuard is doing is we're providing that service free of charge with the policy that you have. And one of the tools that we provide to you, to family members, and to advisors in general is this platform, Caregiver Advocate. We've partnered with our claims team in order to create this and distribute it out to our ecosystem and our network of advisors and clients to make the process as simple as possible. So what you can do is you can find care providers who are properly long-term care licensed in your area. You can find cost of care in your area. So for example, if you wanted to search up a home health care agency in your city or state, for example, we'll use the 55447 area code in Plymouth here. What you'll find is a list of all of the home health care agencies in that area. You'll be able to see different ratings of these care providers so that you can make a more informed decision and have faith in the people who you are going to be working with. And naturally, you don't need a team in order to utilize the service. You can definitely tweak and compare and contrast items yourself. However, just so that you do know, there is a team there to always help you out when come time for claim, or if you're just willing to prepare for claim. As soon as your policy goes in force, you have access to our concierge care team and you have access to this caregiver advocate website. You're able to see the care services offered and what types of services are offered through there. There might be a nursing home that doesn't have as dedicated a memory care facility as your client might need. And so you're able to work through this and really hammer down a plan of care in as little as a day. I personally like this again because it's not limited to clients. Advisors such as yourselves can utilize this. Insurance agents such as yourselves can utilize this. Family members and friends of the client have access to utilize this. And most importantly, it's not limited to just care providers. There are also different features as well as different resources baked into this platform to show you, hey, maybe, I want to take some ownership of my health now, as even though I know I'm heading in this direction, what can I do to help mitigate these feelings or mitigate these risks that are the custom and that you receive with a long-term care event? So overall, definitely one of our newer and one of our most highlighted resources as of late. And the last option that we have here is more for the front end of your long-term care conversations, and it's our MoneyGuard resource library. This catalog, or rather this website hosts our full catalog of marketing materials. If you're looking for client materials, financial professional materials, we have them listed here. It's a really long page, so if you don't want to scroll all the way down, that's fine. You can look on the right here, click on the top right, and sort the page by what you're looking for. So if you're looking for MoneyGuard Fixed Advantage materials, you can click on that portion. If you wanted to look for, I don't know, if you wanted to look for other MoneyGuard materials, California only materials, sales tools, you have the option to do so. MoneyGuard 2 materials in California, we have them. And it's not just brochures. We have seminars, we have PowerPoints, we have videos, we have, heck, we have claims materials as well. How to file a claim with MoneyGuard, a claims process overview, application process overview. Anything that you can think of relating to insurance carriers, MoneyGuard, applications, we have it here. We try to make it as simple as possible. This is free to use. You don't need a MoneyGuard login in order to access this. It's simply just a website, and you have it in the palm of your hands. And if you ever need a link for it, you can always contact Brittany. She is a tremendous resource to help connect you and plug you in with anything that we're releasing that's new. And as well, ancillarily, you also have Rob and myself to help guide you with any conversations that you're having. So Rob, that being said, I'll hand it back over to you.
I appreciate you jumping in, especially a little down today. Brittany, we want to turn it back to you. We're right at 28 minutes today. See if there were any questions. Otherwise, we can, I'll let you wrap things up with a couple things.
All right, guys, amazing job today. Looks like we had a little bit of a shy group, so no questions in the chat or question box. Of course, if you all think of questions later on, feel free to call the team, and we'll definitely be happy to have a one-on-one discussion with you. But before we let you all go, we want to offer you a way to earn free CE. Yes, I said it, free CE. We want you to think of a client that may benefit from having a long-term care insurance plan. Then pick up the phone and call our team for an illustration by March 1st. By doing so, we'll get you a voucher for a free CE course in your hands. Now, of course, I want to thank everyone for joining us today, and also tremendous thank you, Rob and Derek, for co-piloting today's session. So if you do still have questions or would like a one-on-one discussion, please feel free to reach out to our team at 800-228-0008 or email us at ltci@jetter.com. I hope everyone has a great day. Take care.